Hey everybody, what's going on? It is James here with Crypto Common Sense. Want to shoot a market update video for you. It is Saturday, September 7th, just after 3 o'clock in the afternoon, and the market is about to trap some more folks. All right, so let's talk about that today. Before we jump into the content though, please do me a huge favor. If you're watching this video and you enjoy it, please go ahead and give it a thumbs up now. Also, don't forget to subscribe to the channel if you haven't already, and don't forget to leave me a comment. I always ask folks to leave me a comment, let me know if you're bullish or bearish and why, but nobody ever does, it seems like. Just a couple of people, a couple of rock stars that make sure to do that for me. It would really help me if more folks would leave me a comment and YouTube would say, hey, these videos must be good, people are commenting. All right. Let's go ahead and jump into the content. So yesterday we had the big dump, and that was interesting to watch all the people on Twitter. You know, we're going to talk about Twitter because it's a great gauge of market sentiment, and essentially a lot of people had gone full bear before this thing started to pump, and then all those people who were full bear suddenly became full bull. There were lots and lots of people who were saying, oh, look at all the bears getting crushed, and laughing at people and you know, bragging and beating their chest and all that kind of stuff. What they don't realize is that it's very likely that they're wrong and that this is bear and that it's going down much, much further. But the market doesn't move in straight lines. We're going to talk about several different technical analysis pieces today. But the thing I want you to take away more than anything else is markets do not move in straight lines. So when this started to dump and everybody shifted from bull to bear, right, they got all bearish and they started going short down here. And then it started to go up, and now, of course, they're switching back to bull, right? Oh, we're going up, we're going up. Like I saw somebody earlier pointing to a daily chart. I'll show you that in just a second, giving reasons for why we're going up, right? Listen, I don't think we're going up. I don't know what's going to happen. I don't have a crystal ball, but I do not think we're going up. I'm still short. I have 20% of my trade portfolio in an open short position that I did not close on this dump. Now I opened a new position on top of it up in this area up here, and I did close it on this dump because I don't want to be overexposed. I don't want to be overly greedy, but I still have 20% of my trade portfolio, which is a fair amount of money, in an open short position, and I'm still targeting the big dump. I'm still targeting the capitulation. I'll have to see what the market looks like if and after we dump down to the bottom of this big descending triangle we're in. It may be that we get another bounce, so I'll have to watch it carefully there. I may end up exiting the trade for a profit at that point, but I'm not gonna get out of the trade right now. What we have right now, this bounce going on, this to me looks like a textbook bear flag. So if you're not sure what a bear flag is, I've actually pulled up an image here. This is a website. You can go to this website. I'm not associated with it, but it's got great patterns. It's called chartpatterns.com. And in this case, what I'm looking at is this pattern right here. I'll zoom in so you can see it a little better. Basically what you get is you get a break downward, then you get an upward moving consolidation period, and then you get another break downward. And essentially what you're looking for is you're looking for this A leg right here. You want this second leg to equal that A leg, okay? So in the case of this breakdown, in the case of this Bitcoin, excuse me, if we look at that, and what I'm going to do is I'm going to pull another chart in that's not so messy because I want to talk about this wick-off stuff in just a minute. If we pull this in, we get rid of RSI for a minute, and we look at a 4-hour chart, look at this, right? What we can do is we can actually measure. We don't have to measure it. We'll just do a ghost bar. We can just take this bar, excuse me, not those two. If we go from the top to the bottom, basically what we do then is we line that up with the top of it. So it could go a little higher, but for right now, this is our top right in this area. Get as close as I can. Okay, and that would give us a breakdown target on that bear flag of 98.17. And if you look, that lines up really nicely with this area. Let me draw some Fibonacci levels for you. And well, what do you know? That would put us right down inside that golden ratio that I'm constantly harping about. Right, our golden ratio is actually sitting right around 99.36. So that's what I'm expecting. I'm expecting that to break down. I'm going to show you another reason that I expect it to break down in just a second. But first, I want to tell you that it's entirely possible that it pumps a little further. It's possible anything happens, but it's entirely possible that it might pump all the way up to the 61.8 fib here, the golden ratio for a short. So we may see this thing go all the way up here to suck in the bulls, lay that nice, beautiful bull trap, and then dump down to that $9,800 level. So we'd have something like this. And again, that would be a picture perfect bear flag. Okay. The other reason that I think this thing is still going down, and the reason that I was able to add to my short position with a fair amount of confidence, is because of this right here. Now, I'm going to get rid of all these lines so that they're not confusing you, or, well, so that my chart doesn't look like spaghetti. I don't think they're going to confuse you. We'll get rid of volume, and we'll get rid of this, all this stuff, okay? If we just have a candlestick chart, very simple candlestick chart. What this was a wick off pattern. Now, I posted about this in my Facebook group well before this happened. I actually posted about it when price was right about here, saying that I was going to be adding to my short position. It was a very textbook wick off pattern, okay? If we take a look at a wick off event, there's a couple different schematics, but this was the schematic that we actually just went through, in my opinion. You can see that, you know, I can't pull these in side by side. It'll squish it up. It won't be difficult to tell what's going on in the video. But essentially, you have this pattern. So all I did was mark this out on my chart, and I was looking for this test, right? What this is this is basically the last, you know, like the blow off top, so to speak, before you start going down. And if you look at the chart, again, I've marked all this out. You'll be able to see it. We had all these figures, and then over here, what we had was the UTAD, right, which is the upthrust after distribution. So basically all through here was distribution. I talked about this. I said this was distribution in a video 4 or 5 days ago. I said, look, this just looks like distribution, and we should get a markdown afterward. Well, what we got was we got an upthrust afterward, right? There's two different wick off events, or two different wick off schematics for distribution. There's this one, and then there's also this one where you don't get the last push. You just get like a little, you know, a very weak push and then the dump. Well, we got the first one. By the way, just to be very clear, I thought we were going to get this one, and so I opened my short, my new short. I added to my short position at 10,732 or 10,738, somewhere in that ballpark. I think it was 738. So I was expecting this. So what I did was I added to my short right here in this area, and then we got this. I didn't get stopped out. I had a stop loss that, you know, was plenty high enough that I didn't get stopped out on that. But I did miss a little bit of the move there. And then when it dumped, I was able to close this position for a very nice win. So this was our UTAT, right? And then after that, you get this dump, and then you get a consolidation, and then you just keep going down. And again, I can't show you both at the same time, but essentially what's going to happen, if it plays out according to this wick off event, we're probably somewhere in either up in this area right here, right? Look at that. It's just a bear flag, or we're somewhere in this area right here. Okay, it's very difficult to tell for sure where you're at until after it happens. You can kind of tell when you're going through this. It's pretty easy to tell what's what. But in here, it's a little tougher. So I suspect that we probably are right in this area, and that then we're probably going to go down here and then, you know, even further. But it could be, again, that we're already down in this area and that we're just, you know, maybe like at this point in the process. Either way, it doesn't matter. Either way, if it continues to go the way it's going, we should continue moving downward. In phase E on this event, this is a local wick off. This isn't a big like monthly chart or anything. This is just a 1 hour chart. I would expect that to take us down to that $9,800 level. So again, if we draw Fibonacci levels on here, I would expect this is going to take us down somewhere in here. Okay. Now here's the other thing. I don't know that it's going to happen today necessarily. It's a little bit tricky because look at this. If I pull in another chart, look what happened on this deal. Last night, the CME closed right in the middle of all this dumping, and it had this gap. You're looking at it going, there's no gap there, James. There is absolutely a gap. On the 12-hour chart, look at this. We had this huge gap. So it came down and it didn't quite fill it. So that's another reason that I'm still bearish, because it's so darn close to filling that thing. I almost expect for it to maybe play around in this area. And again, it's closed until tomorrow evening. So it's closed for another 24 hours or just over 24 hours. It could be very well that this thing starts to pump, traps a bunch of bulls up here, and that when the market opens on the CME, that's when we get the dump. And again, this gap, it starts around 10,100. So if we go all the way down to 9,800, it's going to fill that gap for us. Okay. So lots and lots of stuff going on in this market, which is really exciting. It presents some really good trading opportunities. But the one thing is, like I said, they don't go straight down. They don't go straight up. They're always going to, you know, if you're a bear and you went short up here and you were trying to hold it, this is going to push up like this, and it's going to make a lot of bears capitulate, or a lot of bears give up their position and say, oh, you know what, I think it's going back up. And, you know, then they'll switch to a long. And right about the time that people switch from a short to a long is when this thing is going to go down more, if it does. And it very well could be that, you know, this was just a trap for the bears and that a bunch of people went short here. This really is going to push up and, you know, go to another high. We never know for sure, and that's why risk management is so important. That's why I'm in a position that's 20% of my portfolio, not a position that is 100% of my portfolio, because I never want to be that exposed on a trade. But like I said earlier, I wanted to show you something that I saw somebody talking about, a daily chart. And by the way, I'm not knocking this person in any way, shape, or form, because I actually agree with what they said. They were saying that it looked bullish when you look at the RSI. So if we look at the RSI, not on a CME, but a regular chart here, if we turn our RSI back on, what they're talking about is the trend line that I've actually been watching and talking about in my videos for the past, well, I don't know, week, 2 weeks, something like that. It's this daily trend line that looks like, that's not it. It's the big one, okay? Basically, it's this one, okay? And what this looks like, very, very textbook stuff. This is what I was calling a descending triangle, and this is what got me in trouble, because I'm going to show you a couple things today, actually. I'll show you one big mistake I made. This got me in trouble because it broke south of this, and I thought it was going to come up and retest the bottom, so this is where I was looking to go short, and I was blinded by my bias, which we'll talk about in just a minute. But I was looking to go short here, so as soon as it got back up to that level, I was popping open shorts, right? If you look at price action, that was way down here around 9,800. Terrible idea. My short was actually at 9,850. Terrible, terrible place to go short. Not just because I was wrong, but it was obvious that I was wrong. I'll show you why in a second. But this RSI came up above this descending triangle, and now it looks like, if you look at the daily, it's like, uh-oh, look at this. It's just coming down. It's retesting support slash resistance that is flipped to support. This looks very, very bullish on RSI. I'm not disagreeing with them. They're 100% right. That is definitely a bullish signal on RSI right there. So that definitely, it does make me a little nervous as a bear until I zoom out and look at the weekly. Because if I look at the weekly, and by the way, weekly is always stronger than daily, right? The bigger the time frame, the more powerful the signal. Look what we have here. We don't even need the chart, the price chart. We can just look at RSI. There we have it. There's our trend line for RSI. So we've come up, we tested it, we came down, and it looks like we are now testing resistance, okay? Which would make perfect sense if you think about it, because up here, we also were testing resistance up at the top of this, trying to test the top of this triangle, if I can talk today. So that's kind of what I'm saying. And again, that's why I think it's going to drop. That's why I think, we are going to go down. I think we just came up, test resistance, relieve some oversold conditions, because we did get oversold very quickly on that dump. If you look, that dump happened so fast. We went from being overbought at 11 a.m. when that candle opened to noon Central Time. Suddenly we're down here at 31 RSI, and just 2 hours later, bam, we're suddenly oversold. So that's kind of what I'm looking at on Bitcoin. Again, I think this is just a big bear flag, and I think we are going to continue going down. Now, here's what I missed because of my bias, and I want you to learn from this. Don't get so locked in that you miss stuff. I was so laser focused on waiting for the perfect short entry that I missed an obvious falling wedge. Now, I didn't see anybody talking about it, and that's one of the reasons I'm on Twitter, is because I like having people on Twitter who disagree with me, right? I don't want to be in a vacuum where everybody agrees with me. Like my Facebook group, most people agree with me because it's my group. I think, sometimes maybe they disagree and they're afraid to speak up. Same thing on YouTube. Like people watch my videos, I think they don't want to, disagree with me because they're like, hey, it's this dude's YouTube channel. I don't want to disagree with him. I actually like it when people disagree with me if they do it in a respectful way. That's why I'm on Twitter, because lots of those people disagree with me, and it's great to see different viewpoints. But this time, nobody was posting this chart, and that surprises me, because if you go back and look, this was a falling wedge. This was a very easy to spot falling wedge. Look at this. So remember, I was drawing this going, oh, hey, look, we're in this descending triangle. It's a smaller descending triangle. This is going to be great. What I actually said was this was our descending triangle. I thought we were in a small descending triangle, and that we would come up and retest the bottom of it and then keep going down, right? And that's why I went short there. Here's the problem. It wasn't a descending triangle, or it was kind of a fake out. It really, if you look at it and you're going by the closes instead of the tails, it was more of a falling wedge. Look at this. That's a pretty textbook falling wedge. Now, here's the real shocker. Instead of going short here, what I should have been doing, let's look at this. What I should have been doing is going long, right? Right around 97.50, I should have been opening a long position. And if you measure this, the way a wedge works, you just measure the height of the wedge. Watch this. So what we can do is we can actually copy that over, paste it over here, and that would have been my breakout target. And if you look at that, If I'd entered a long position down at 97.50 on that breakout with a target up around 11,200, that would have made perfect sense. Now, you might be saying, yeah, but James, it didn't get to 11,200. It's perfectly fine, right? I always take profits in segments, right? I think most traders work this way, is if they have a target, they don't wait to hit the target to take 100% of their profits. You know, if this started going up like this, and then I saw that wick off pattern playing out that I just showed you, of course I would have been looking to take profits. And there's a good possibility that I would have just exited the entire position on that last upthrust, on that last UTAD, which is the upthrust after distribution, right? So that means I would have been taking profits somewhere around the same spot that I opened shorts at, right? I opened new shorts up at 10,738. So I could have taken profits there, and that would have been about $1,000 profit per Bitcoin, about $950 per Bitcoin after fees. Would have been an amazing trade, and then I could have flipped short, right? Very, very simple, but because I was blinded by my bias, because, you know, on a macro level, I'm very, very bearish. On a macro level, I think this thing's going way down. So, you know, I wasn't looking for a long opportunity. I wasn't even looking, because the general rule of thumb is you don't fight the trend, right? And trading, they say the trend is your friend. Well, if I think it's in a downtrend, then I'm not going to look for long positions. But the reality is trend reversals can be some very, very profitable trades, and that can be some of your best trades is a trend reversal. And a falling wedge, it's a very good sign for a trend reversal. And in fact, it's a little bit, you know, it's a little sad that I missed this one as well. You know, I've been doing really good with my shorts throughout this whole chop, but I've been doing terrible with my longs. And this was the same deal, right? We actually did have this falling wedge. Now this one's a little, I can kind of understand why I missed this, because we had quite a bit of, you know, that's quite a bit of price action below that level. But again, some people were calling that a falling wedge. I think it's fair to call it that. Maybe if you drew it like that. Okay, so you drew it like that, it was a little nicer. You have to use the tails a little bit. But essentially, we had a falling wedge. It pumped 30, 35%. I missed that long spot. And then now we just had this other falling wedge. Same deal, I missed it again. So got to remember to start looking for trend reversal stuff instead of just being so darn bearish all the time. Overall, though, that's what I'm seeing on Bitcoin. Let's talk about alts. I know everybody's probably excited about altcoins today. So alts are pumping like crazy compared to what they have been, right? It's really not that big of a pump going on. It's about 5, 6, 10% on some alts. But really, it's funny because I think the last video I did, I was actually saying alt season right around the corner. And some people might watch that and go, wow, he called it. I didn't. This is not alt season in my opinion. I do not think this is alt season. I think this is simply a dead cat bounce. So, you know, for me personally, I'm not going to get all excited and start buying up a bunch of alts, because I don't think it's any more than just one last, you know, whimper before we find the true bottom on those altcoins. However, I do want to show you a Litecoin chart, because if you look at Litecoin, there was a very obvious reason to enter a trade on it. I actually did enter a trade on Litecoin, but I exited it way too early. And I entered a day trade on Bitcoin as well. Let's talk about Bitcoin for just a second. I want to explain something as a trader. I think this throws some people off. So I'm sitting here going, hey, I'm bearish, I'm bearish, I'm bearish, I'm short, I'm short, I'm short. But I entered a long position at $10,235 yesterday. And some people are going to hear that and say, wait a minute, how did you go long when you're short? It's very, very simple. Remember me telling you I had 20% of my portfolio in a short? Well, guess what? Then I turn around and put another percentage of my portfolio in a long, right? Because the short position is a longer term. This is a swing trade, right? I'm waiting for us to get down, hopefully down to $8,000 on that short, right? So that's going to take a couple of weeks probably to get there. In the meantime, I don't want to just sit on my hands and not trade. So when we got down here, but yeah, I took a trade it down at 10,235, right? I closed it way too soon. I missed most of this move, which was kind of a bummer. I just was playing it for dead cat bounce, but you know, it is what it is. So I went long down there, and I want to explain that because a lot of people see somebody post something and say, oh, they're short or they're long. They don't realize that on multiple time frames, you can have different different stances. I can be bullish on an hourly chart and then look at the weekly chart and be bearish, or vice versa. But if we look at Litecoin, Litecoin was a really good example of this. Let's just take everything off. Actually, we need RSI. Litecoin put in a really massive divergence, and it was a really, really good trade spot. If you look at this on an hourly chart, look at this. You actually had a really nice divergence here, right? Price dropped down, made a lower low, while at the same time the hourly, not a 5 minute, but an hourly chart, look at this. It made a much, much higher low. That would have been right here, okay, right there. That's a massive divergence. At the same time, it was sitting on this, it basically came down and slid through this long-term trend line. That yellow line that you're seeing right there, that's actually the trend line from December. Okay. Oh, this is super annoying when it does stuff like that. But anyway, ignore that yellow line going straight up and down. See these long-term trend lines from December, there's basically 3 of them. And what Litecoin is doing is it's bouncing around inside of the top 2. Okay, so this is an hourly chart, but if I zoom out, you can see we've got one down here, here, and here. And it's basically been consolidating between these 2 lines. So what we had there, and I didn't see this, I wasn't even looking at the Litecoin chart when this happened. I actually went long over here and sold at 66.90, right? And then when it started dropping, I wasn't paying attention to it. But we had this hourly divergence here. We had that these long-term trend lines going on, and if you look what happened, huge pop, right? It popped. It was about 10%, 10.5% in less than 24 hours. So that would have been a freaking amazing trade had I seen that. But that's something that, first it had the bullish divergence, right? Price making a lower low, RSI making a higher low. But then on top of that, if you were nervous and you didn't enter there, it also had a hidden bullish divergence on top of it. Watch this. So then it turned around and it made a, right here, price made a higher low while RSI made a lower low. And that is hidden bullish divergence, right? So there you have it. See that? Price makes a higher low, RSI makes a lower low, and that is what you're looking for. Is that can only happen, or it's only valid in a downtrend. Okay, so that's what Litecoin was in. Litecoin was in a downtrend, and first we had this nice, beautiful bullish divergence, followed up on an hourly chart by a hidden bullish divergence. So if you didn't get in over here, right around here was a really great entry for a trade. Right around $64.69 was the close of this candle right here. Okay, so 64.69, and if you had gotten in there on a trade, look at this crazy stuff. That if you rode it all the way up, which by the way you never get the full move, but if you had rode it all the way up, it moved up 9% from there, right? So even if you were still holding it right now, it's up about 7.28%, so about 471 per Litecoin. So imagine if you're doing just for example a $10,000 trade, maybe you've got leverage, maybe you're using 10,000 of your own money, whatever. 7% after fees and everything. That'd be like $700, right, on a single trade on a $10,000 budget. Pretty darn good. So again, I don't think that this is alt season. I could be dead wrong, but I don't think it's alt season. I just think it's a dead cat bounce before we finally capitulate. Okay, I think it's like that last whimper, and then alts are going to find where their true bottom lies at. So keep that in mind. But again, also keep in mind that I don't know what the hell I'm talking about sometimes. Sometimes I'm just dead wrong. Overall, though, I think once Bitcoin completes this bear flag and completes this wick-off pattern that I believe we're in and starts going down, I think the alts are just going to get yanked down with it. I do not think that Litecoin is going to be able to survive. And also, if you look at a Litecoin, by the way, survive, I don't mean it's going to die. I just mean I think the price is probably going lower. If you look at a Litecoin Bitcoin chart, it looks even worse, right? Look at this. Litecoin is literally sitting at the lowest level it's ever been, except for this tail in December of 2017. Now this chart only goes back a couple of years, so it might have been lower than that at some point in the past before then. But as far as Litecoin Bitcoin pairs, it's got this giant confirmed M, and basically it's got a neckline that's sitting right here. So you can see today that it did have a really nice pump. Or excuse me, that's a weekly deal. It had a really nice pump this week, but really all it did was come up and test the neckline and fail. So, if it breaks through that, that'd be super bullish, right? If it does break through that on the Bitcoin pair, that might be a reversal signal. That might mean that we have indeed seen the bottom of the Litecoin USD price, okay? Because again, we are inside of my favorite thing, which is the golden ratio. We look at this. Bam, right? We are inside the golden ratio, down under the 61.8 fib. Unfortunately, right now, if you look at that, it looks like we just tested the 61.8 fib from underneath, and it failed. So that's not bullish looking at all to me. A lot of times with alts, you'll actually get them, instead of stopping at the 61.8, they'll actually go down to the 78, which in this case would be around $48. And again, I don't think it's unheard of that it would go even lower. One other thing I want to talk about real quickly, and then I think I'll wrap this video up so it doesn't get too awful long. If we do take a look at the CME chart on Bitcoin, there's a gap that I've never talked about, and I'm going to tell you why. I didn't notice it. I didn't even notice the thing existed. lives on the 4-hour chart, and I have to go back to March to find it. Remember how gaps like to fill? It's not required, okay? I have seen people say that they have to fill. That's not correct. They do not have to fill. They normally fill, okay? It is very likely that they fill, but they do not have to fill. That being said, we do have a CME gap, and as far as I know, I can't swear to this, but as far as I know, there has never been a CME gap for Bitcoin that did not fill. Never. Okay, and there's the gap right there. It's down between 3,571 and 3,600 bucks. That's a really small gap. Okay, it's a tiny gap. If you look at it, it's literally between 3,570 and this right here had a low of 3,595. So it's a $25 gap, and I don't know that it really bears that much significance. I really don't. $25 doesn't seem like a lot to me. It seems pretty far-fetched. Even as a bear, it seems fairly far-fetched in my mind to go all the way down here just to fill a $25 gap. Okay, but if you are wanting the full picture, it is worth knowing that that gap does indeed exist. And remember, my target is still 4,200 bucks. Okay, so what might happen is maybe my target gets hit at 4,200 and maybe a tail slides down there and finally fills that gap. I could definitely see that happening. I will put some money on the exchange that I don't really want to invest, but I'll put it down there with orders sitting in down around that zone so that if they fill, I can quickly flip them for a profit maybe, or maybe even I'll hold them. That's something about trading that I think some people don't understand is, you know, when they say if you're going to invest, only invest what you can afford to lose. See, trading is a lot different from that. Right? If I'm trading with, just as an example, if a person is trading with 10 grand, maybe they can't afford to lose 10 grand, but they can afford to lose 300, right? Well, if I put a $10,000 trade on the books with 3% risk, that means I'm going to get stopped out at 3%. That is risking 300. It's not risking 10 grand. You know, sure, there could be some type of black swan event where I lost the entire 10 grand, like the site went down or stole my money or something. But overall, you know, I don't mind putting some money on there that I don't necessarily want to lose. I mean, I don't want to lose any money, but you understand what I'm saying? Like, I don't mind keeping money on there that I don't want to invest just in case, something like that. I don't mind having an extra bit of money sitting on there with bids sitting in. Like right now I have bids at $13.50. Do I think they're going to fill? Probably not, right? They're probably never going to fill. There's a gap at $13.50 to $1,800. It's not on the CME, but it's on just the regular volume gap. It's probably never going to fill, right? But what's it hurt for me to have a few extra $1,000 sitting on the exchange with a bid sitting there? If it never fills, so what? The money's sitting there, I can always withdraw it. If it does go down there and fill, well, in my mind, I'm probably going to see a 40 or 50x return on that. So there you have it. Okay, with all that being said, I'm going to go ahead and wrap the video up. Please remember, I am literally some guy sitting in a spare bedroom. I am not a financial advisor. I'm not your financial advisor. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. Also, if you enjoyed the video and you haven't already, please give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on Twitter, TradingView, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.